Welcome to this topic, payrolling benefits in kind. My name's Alexandra Durrant and I'm going to take you through the subject now. Currently, employers are able to payroll benefits in kind on a voluntary basis. This was introduced by the Revenue in April 2016 to reduce the number of P11D forms they receive each year from employers. The topic of payrolling benefits was discussed some years ago before the introduction of real-time information. But then along came universal credits and therefore real-time information, and the payrolling benefits was put on the back burner. At that time, payrolling the benefits was to be a mandatory item. But since its introduction in April 2016, it has been optional for employers. If an employer decides to payroll benefits, I will explain how that works shortly. They can decide to payroll any benefit in kind they wish, with the exception of living accommodation, where it doesn't fit with the concession to be non-taxable, and beneficial loans. Should the employer decide to payroll benefits in kind, this means that no P11D form is required to report that benefit. So this will save employers a considerable amount of time when they come to post-year-end looking at P11D reporting. However, if an employer decides to payroll some benefits, but not all, then those benefits which aren't put through the payroll will have to be reported on the P11D. So how is this going to work? Well, first of all, the employer must decide if he wants to or they want to payroll benefits. If they do, then they have to register online with the Revenue before the start of the tax year. You can do this by going onto the Revenue's website and selecting payrolling benefits. The employer then registers with their PAYE reference number and name, and then they're able to select the employees they want to payroll the benefits for. So this could be directors only, senior employees, or it could be for all employees, which makes sense because that reduces the P11D reporting requirement. The employer then has to identify the benefits they wish to payroll. So they could select private medical, gym subscription, company cars, or whatever benefits are applicable to them. The important thing is that the employer registers to payroll benefits in kind before the start of the tax year. So it's too late to register for this year, 18-19, but you are in plenty of time for 19-20. The Revenue, in fact, suggests that if you want to payroll benefits from the 6th of April 19, you should register for payrolling benefits before Christmas. The reason for this is it enables the Revenue to adjust tax codes for the 19-20 tax year, removing the benefit that is going to be payrolled, so that the employee does not pay tax through the payroll and through their tax code. So let's suppose the employer has decided to payroll benefits in kind. What does that mean for the employee? Well, what the employer has to do is that they must notify the employee that their benefits are being payrolled and that there will be a change to their net pay going forward. At the end of the tax year, instead of issuing a P11D by the 6th of July, the employer is required to notify by letter the employee of the benefits that have been dealt with through the payroll, and this letter must be provided by the 1st of June after the end of the tax year. That letter must show the benefits that have been payrolled, the cash equivalent for each benefit, and I'll explain that term shortly, and, if necessary, provide separate details of any items that were not payrolled and therefore will be appearing on the P11D. Let's now see how that's going to work in practice. So once the employer has decided to payroll benefits in kind, he then needs to work out what value is going to be used for that benefit in kind to go through the payroll. The benefit in kind value is the same value as you would use for calculating the P11D figure. So the employer must calculate the cash equivalent. The cash equivalent is the cost to the employer of providing the benefit in kind, plus any VAT that you may have stripped out in your accounting records. For benefits where there are specific rules for calculating their value, like a company car available for private use and the related fuel benefit, or company vans available for private use and the related fuel benefits, then the cash equivalent will be based on the rules for calculating the P11D figure. If the benefit in kind value is not known at the start of the tax year, then the employer can use an estimated value based on the cost for the prior tax year. Once the real figure is known, then the estimate can be adjusted. So the figure that's going to go into the payroll is the cash equivalent divided by the number of pay periods in the tax year. That figure is then added to gross pay for tax purposes only. Now, RTI is set up to accept benefits in kind. So what the employer would need to do would be to set up the gross pay element, benefit in kind, which is taxable only. Then into that, put the value of the monthly, if we're running our payroll monthly, the monthly payroll benefit. If the benefit in kind figure changes during the year, perhaps someone's private medical premium increases, then you would calculate the gross pay again based on the new value and increase the payrolls going forward, the payroll gross pay going forward. Let's have a look at an example. Let's assume our employer is providing private medical insurance at a cost of £1,200 per annum. So if we're looking at starting payrolling from April, the employer would set up a gross pay element in payroll called benefit in kind. This should be treated as taxable but not subject to national insurance. And then you would also need to set up a deduction from net pay equal to the benefit in kind value. So based on the example of medical insurance of £1,200 a year, if we divide the £1,200 by 12, the number of months in the tax year, assuming we're running a monthly payroll, we would get a gross pay element of £100 per month. This would go into gross pay, so gross pay would increase by £100. That £100 will also be entered as a deduction from net pay because we don't want the employee to receive an extra £100 actual money. So the £100 into gross pay is cancelled out by the deduction from net pay. But in between, once the payroll is run, the net pay figure of the employee will have reduced by the tax on the benefit in kind. So by £20 if they're a 20% taxpayer, £40 if they're a 40% taxpayer, or £45 if they're a 45% taxpayer. Payrolling of benefits is not an issue where an employee, gross pay that doesn't vary very much month by month. But where there are potential problems will be if an employee is on a basic salary, which is fairly modest, and he receives commission, or where an employee goes on to sick leave, or an employee goes on to maternity or adoption leave, and their salary reduces, but the employer continues to payroll the benefit. So let's have a look at this example of an employee on statutory maternity pay. If the maternity pay for the month is £580.72 and the benefit is £200, then the gross pay is going to be £780.72, and that's what the PAYE will be calculated on. Just as an estimate, let's say the PAYE figure is £312. That is an awful lot of tax to pay on effectively £580 cash. So there's a rule under benefits in kind, which says, payrolling benefits in kind, which says that the overriding regulatory limit will kick in. And this is a limit that restricts the tax deduction to 50% of the cash pay, in this case £580.72. So the maximum amount of tax that can be deducted is £290. Fortunately, payroll packages will do this for you, but you need to be aware of the issue. The underpayment of tax, the difference between the 312 and the 290, is carried forward to the next payday. If the lady, this particular employee, is still on maternity, then the issue is not going to get any easier. So the other option is to stop payrolling the benefit, advise the revenue that the benefit is no longer being payrolled, so they will then put the benefit back into the tax code. This means that you can't go back to payrolling the benefit for this employee until after the next year's P11Ds have been submitted. In some cases, the employer may provide a benefit in kind to the employee, and then the employee agrees to reimburse some of that benefit to the employer, thereby reducing their tax liability. This is known as making good. And the issue with payrolling benefits in kind is that there is a potential problem if the making good is not actually done by the employee. So looking at private medical insurance again, this, in my example, costs the employer £3,600 per year. And let's say the employee agrees to reimburse £1,200 of that being the family element. On that basis, when you're payrolling the benefit in kind, you can deduct the £1,200 from the £3,600. So we have £2,400 to be put through the payroll, on a monthly basis being £200. Working on the same basis as in our previous examples, the net pay will just reduce by the tax on that £200. Don't forget to include the deduction from net pay to ensure the employee's net pay doesn't go up by that £200. But the employer must then make sure that the £1,200 is repaid by the employee. If that's not being collected through the payroll every month, but is something that the employee must pay before the end of the tax year, if that reimbursement is not made by the employee by the final payday in the tax year, then the employee must go back and add the £1,200 that hasn't been repaid into the benefit in kind, plus the £200 that was there already, and deduct the tax. Again, don't forget to correct or amend the deduction from net pay to make sure the employee doesn't receive that £1,200 in their pocket. This slide also looks at making good, but is in respect of car and fuel benefit, where the deadline for making the reimbursement is not the end of the tax year, but as you can see from this example, is the 1st of June. So here we've got an employee with a company car and they have a fuel benefit as well. But because they agree to reimburse their private mileage, that negates the fuel benefit. So all the company has to put through the payroll is the £5,580. What the company then needs to look to check is to make sure that all of the employee's private mileage has been reimbursed. The employee has up until the 1st of June to make that reimbursement. So if the private mileage hasn't been reimbursed, then in the next pay run after the 1st of June, the employer must add the fuel benefit, in this case £3,500, to the benefit in kind to recover the tax due. That's not the only thing the employer must do. The employer must then, in the current tax year, ensure that the fuel benefit charge is taxed in full because the employee hasn't reimbursed in the prior tax year. So a costly error from the employee's point of view if they haven't made good their personal mileage. One thing you may have picked up during my examples is that I've only talked about payroll and its collection of tax. That's because employees do not pay national insurance on benefits in kind. So you don't want a NIC deduction to be made in the payroll. The payroll gross element must clearly be PAYE only. However, there is employers' national insurance, Class 1A, to pay on benefits in kind. But this is not collected through the payroll, because if it was collected through the payroll, it would be being paid on a monthly basis, where it's actually only due by the 19th of July following the end of the tax year. So even though the employer will have payroll benefits, those benefits still need to be reported on the form P11DB. You may remember that's the form that calculates the Class 1A liability. So all the benefits that have gone through the payroll and have had tax deducted must be added up, multiplied by 13.8% to get the Class 1A national insurance liability that is owed by the employer. Not only must they do the calculation for the benefits that have been payrolled, but they must also do the same for any benefits that have not been payrolled but that are entered on the P11D. And it's really important to remember that P11DB form, because if it's not filed by the 6th of July and the money paid by the 19th of July or 22nd if you're paying online, there will be a fine. And the fine raised by the revenue is £100 for every group of 50 or part thereof employees up to a maximum of 12 months for the delay. So an important word of warning. So payrolling benefits is something to be looked at. Having spoken to a number of groups over the last couple of years, not very many employers have taken up this opportunity. Those that have primarily used it to payroll private medical, as that's a fairly straightforward benefit to deal with. However, I suspect that over coming years we will see the payrolling of benefits becoming more popular. Thank you very much for listening.